Good morning, good evening, good afternoon, and welcome to the Booms and Bust Show. My name is Jonathan Davis, and we've had a great week, in one respect at least, because last year we got our Independence Day. The Brexit referendum, 52% leave, 48% remain, and they are still moaning. They're bramoners, aren't they? The BBC, most of the politicians, the academics, the civil servants. The fact is, ladies and gentlemen, 52% is what it is. That's democracy. Still, you've got the likes of the guy that flogs the crisps and all the rest of them saying, if only we'd another referendum, then, it's obvious that Remain would win. Well, someone did tweet, well, you know what, Lineker, if only many of the matches that you played in were replayed, you'd have lost, and so on. Well, welcome to the Booms and Bust Show, where we discuss free market capitalism, independence of thought, freedom, liberty, not socialism, capitalism, but capitalism, not cronyism, not fascism, communism, Marxism, because they're all the same. The only one that is different is capitalism. It's the only one that stands out as actually being a success for the people. Was it the Communist Party of Great Britain or the Socialist Party or something like that had a Twitter debate with Julia Hartley-Brewer last week, and rightly so she asked them the question, come on then, tell me one simple example of a country which has socialism that has been successful. There was, of course, no response. I listened to an interesting interview with who appears to be an absolutely brilliant new chief trade negotiation advisor for the United Kingdom, a chap by the curiously named Crawford Falconer. This chap, just Google him. He's been on every global level trade body you can think of. Started off in New Zealand, went to the World Trading Organization, WTO, and so on. He sounds absolutely spectacular. You really want to Google a recent interview he did with, I think it was Giles Dilnot, and he recounted a tremendous story of his own country, New Zealand. He's a New Zealander. When the United Kingdom joined the EU and suddenly all those tariff barriers went up, well, for decades New Zealand was like a region of the United Kingdom. They would send us butter and lamb, and we would send them Morris Oxfords. Didn't we like them? It was a very sleepy hollow, New Zealand, a backwater. And I remember in the 1980s, I remember reading about New Zealand. It was straight out of the 1950s. It was worse then even than the Isle of Wight. And that's saying something. And he recounted how the economy went into a tailspin, and they absolutely had to do something, because no longer did they have the easy trade with Mother Britain. And again, I remember in the early 90s, and I didn't understand it then. I thought it was crazy. Of course, Canada did something similar. New Zealand went totally free market. It practically got rid of the safety net. It went global. It opened its markets. It went out to every country in the world and sought to do business with them. And it moved from being a socialist cronyist haven to being like Singapore on a less high-tech basis and more agricultural, of course. And of course now, some 20, 30 years later, New Zealand is a vibrant, global, fast-moving economy. Very successful. Yet another example where you take away the shackles of cronyism and or socialism, and you get vibrancy, you get freedom, you get prosperity, you get more equality, you get rising living standards. What more do you want? Some of you may know Anne-Marie Waters, who is the head of Sharia Watch, and indeed on the 1st of July, she's going to be presenting her prospectus in Rotherham, of all places, for her manifesto, I beg your pardon, her manifesto to launch her leadership bid of UKIP. Now, Anne-Marie is basically an excellent person. She totally gets the not just the threats, but the clear and present dangers of Islamism. She gets it, and she expresses it fantastically. There is no question we have in Anne-Marie Waters a very intelligent, caring and committed would-be politician. And I do wish her luck in her bid. Do you know, as far as I'm aware, she was knocked back by the NEC, which basically means nutty nuttle of UKIP, from standing as an MP in this month's general election, which I find absolutely disgusting and disgraceful. Not a single word has come out of Anne-Marie's mouth, or on paper or electronically, which is in any way corrupt. Not a single word. And yet the leadership and the cronyists of UKIP decided she's not good enough to join their happy band. She's good enough to be a member of UKIP, but don't dare try to be elected. Think about that, you people who love UKIP. You don't know who you're dealing with. And I remember her tweeting a few days ago that they laughed at her Islamic comments, unelectable, all that kind of stuff. Well, you know, so unelectable, they're being elected left, right and centre right across Western Europe. But she tweeted about that, and I tweeted back to her that 2 years ago in the autumn after the 2015 election, when still UKIP didn't have a member of parliament, including, of course, Nigel Farage. This was before Douglas Carswell. I said to the local and regional kippers, I said, you're going for socialism. You are socialists. You're cronyists. You're never going to win purely on anti-EU. Now, certainly it's got you all these MEPs, and it won, no doubt, the Euro elections in, what would that have been, in 2014. I get that, totally. But you're never going to get the representation that you seek, the validity that you seek, which is MPs in Westminster. It's never going to happen while you stand on a socialist and cronyist manifesto. and I've raised this with you guys before, the listeners before, and I know that some of you are saying, well, what are you talking about, Jonathan? UKIP is full of free market capitalists. You're talking nonsense when you say that. They may have the spirit of free markets, but they love their high house prices. They love Help to Buy. They love it when the central bank bails out the banks in 2008 and 2009. They love quantitative easing. They hate capitalism, I assure you. They love cronyism. They love bailing out the likes of Port Talbot steelworkers. They love it because, it's populist, it's popular, and it's QE for the masses as opposed to for the bankers. There's no difference. Either you're a capitalist or you're not. You can't be a little bit pregnant, and you can't be a little bit capitalist. Otherwise, you're a cronyist. And as I've explained to you many times, cronyism, socialism, fascism, communism, Marxism, you name it, they're all the same thing. They're all on the same spectrum. When you get too much cronyism, that's when you get socialism, and then it moves along the spectrum. I told them that you needed to campaign to ban quantitative easing, ban bank bailouts, prosecute the bank generals, which incidentally I talked at length on Sputnik UK TV last week. Bring back Glass-Steagall, separating the investment banks from the retail banks. End Help to Buy. In other words, bring back capitalism. Listener, they laughed at me. Not just, well, above all, because they said it was unelectable, that platform. Unelectable. Margaret Thatcher won 3 landslide elections on the trot on that platform. Unelectable. You dolts. They are idiots in UKIP, and they deserve the electoral death that they're getting. Now, what is fascism? It comes in many guises, and I'm going to go through a few of them, a few of those guises, and these guises are happening right now, or in history, such as a few days ago, it was the anniversary since 1633. When Galilei was forced by the Catholic Church to recant his claim, he had proven evidence, hard scientific evidence by looking through a telescope, recant his claim, even though it was fact, that the sun is the centre of the universe and not the earth. Now, okay, I slightly got that mixed up. The sun isn't the centre of the universe, but of course it's the centre of the solar system. That was fascism by the Catholic Church. And of course that carried on. In fact, in many parts of the world, Catholic fascism still carries on even today. Another example of fascism. And I'm showing you a photo, and I make this crystal clear to you, listener. The photos and the charts and the pictures are alongside the iTunes tweet on the Booms Busts Show Twitter account. So what I do there is I tweet the show. It's the iTunes tweet, on the Booms Busts Show Twitter account, and then you'll see alongside that particular tweet, you'll see the charts, the photos, the pictures. You'll not see them anywhere else. So if you're looking on Audio Boom, if you're listening to the show on your mobile device, you'll not see the charts, you'll not see the photos. You'll only see them if you either go to the Booms Bust Show Twitter account and see the iTunes tweet, or go to iTunes anyway. And go to iTunes anyway, but you'll see the charts only at the tweet on the Booms Bust Show Twitter account, and it's the iTunes tweet. Still, people are saying to me they don't know where these charts are. Well, I've said it every single show, so I made it very clear there. There is a photo of a Chicago LGBT march, and it's a photo of the LGBT multicoloured rainbow flag, and you've got the Star of David there, representing, of course, Jews and Israel. The LGBT group association in Chicago, bearing in mind Chicago is one of the most socialist states in America, up there with California, it banned the Jewish Israeli flag. They said, and I quote, the flags made people feel unsafe. Listener, Israel is the only place in the Middle East where LGBTs have rights. Only last week, there was a massive LGBT parade in Tel Aviv. These people aren't mad. They're pathetically stupid. And that is fascism. Another example of fascism. And this comes from the wonderful Twitterer Lawrence MacDonald, who I think is at Convert Bond. And he showed that in 1949, the entitlements, which means Social Security and federal debt interest payment, the two of them together as a percentage of the federal budget was 22%. 22% for Social Security and interest in 1949. In 2016, it was 62%. The world's gone mad. And that is fascism. Because not only are we giving vast amounts of money to the bankers, but we're also giving money to people who take it with their hands open, and they call it Social Security, but I'll tell you what it is. It's the elite looking after themselves by making more and more and more directly dependent upon them. And finally, what is fascism? Well, not the first point I'm about to make, that 10,000 people in London over the weekend united to demonstrate against extremism. The fascism is that the BBC and the media totally ignored it. And when the Islamists got together, 150 of them, to demonstrate against Finsbury Park, the BBC spent hours on it and said thousands turned up. That is fascism. A couple of other things to talk about in this politics section. Very interesting tweet from a guy called Leonardo Carella. So a year ago, Leave wins by 4%. He actually wrote 2%. It was 4%. lazy young people. 2 weeks ago, 3 weeks ago, Corbyn loses less badly than expected. Engaged young people. And the fascinating thing is that in both cases, and I didn't know this, for the 18 to 24-year-old, the turnout was 64%. In other words, we were told it was the young people who didn't vote who won it for the Leavers last year. It was a lie. And we were told that it was the young people who voted, who won for Corbyn, or who made it less bad for Corbyn. That was a lie too. There is a photo of massive computers, kiosks in McDonald's in America. It could be in Britain as well, because I know that locally there's more and more kiosks where you order your food using this big, massive sort of mobile phone looking thing. Well, McDonald's has just replaced in America 2,500 workers with these mobile phone kiosk things. And let me remind you, listener, because the socialists have been angling for ages for a $15 an hour minimum wage. Let me remind you, and that photo says it all. The true minimum wage is zero. Socialist policies destroy jobs. Look at socialism and look at unemployment. Greece, Spain, Portugal, Italy, France. Never mind all the non-EU developed world countries. Capitalism creates jobs and prosperity. New Zealand, Singapore, Hong Kong, Switzerland, the United Kingdom in the 1980s, and so on. Now, I've talked before, and I tweet all the time, that we're in a 30-year depression. We've already had 9 years of a depression. 1% on average per annum growth is a depression, when the long-run GDP is more like 3%. So the gap of 2% a year is a depression. You can have economic growth and be in depression, because remember, the definition of depression is an extended period of slow or no growth. It's not like a recession where you have to have falling economy. No, it's where you have a significant and extended gap between the long-run expectation and experience for the economy and what you're actually experiencing. And we're going to have another probably 20, maybe even 30 years of economic depression. But the next 10 years is going to be harder than these 10 years that we've just experienced, because we're going to go into recession at some point, and we're going to see massive business bankruptcies, job losses, home repossessions, stocks crash, house market crash, everything you'd expect in a serious recession. But the differences between the next recession and the last huge recession are that A, we've got even more debt now than we did going into 2008, which means it's likely that the next recession will be even bigger than 2008. Secondly, they won't be able to slash interest rates. Another reason why the next recession could well be bigger than 2008. And the reason why the next 10 years is going to be harder than these last 10 years is because we're going into it with more debt and they can't slash interest rates. So there will be home repossessions. There wasn't last time. People's mortgages will still be there. The debts are still there, but many of them will no longer have jobs. The debt and the fact that interest rates can no longer be slashed is going to make the next 10 years hard. Really hard. And then, 10 years later, we'll have another recession. Now, what gets us out of all this? Well, your guess is as good as mine. I hope it will be capitalism, in the sense that the politicians and the central banks will finally come to their senses many, many, many years after they should have done. And people will be in serious, serious pain, economic pain. Living standards will be plummeting. And I hope that they'll just open up trade to everywhere. They'll slash spending. They'll slash benefits. They'll slash taxes. They'll slash borrowing. And the entrepreneurial spirit will take over. They'll separate the investment banks from the retail banks, and the bankers will no longer be in charge. Instead, it will be the politicians and the entrepreneurs. But I don't know. It might be artificial intelligence. It might be tremendous steps forward in technology, in logistics, in communications, in manufacture. I don't know. I fear for the long-term future of the bottom 90%. I fear for our children, and more, I fear for our grandchildren. And if you don't, then what the hell are you doing listening to this show? Because I'm clearly not getting through to you with what's going on. Let's move to economics. On the other hand, and this was quite a surprise to me given what else I've been seeing, and I said to you in one of the very earliest shows, I'm not going to be one big massive doomsayer. I'm going to tell you what I see. And as Keynes said, when the facts change, I change my mind. What do you do, sir? Well, you know, the CBI, bearing in mind this was the organisation that sacked the chief executive who wanted to campaign for Brexit. But the CBI came out last week with a report that says that manufacturing firms have reported that both their total and export order books had strengthened to multi-decade highs, according to the CBI's latest Industrial Trends Survey. The survey of 464 manufacturers found that total order books climbed to the highest level since 1988. This was underpinned by a broad-based improvement in 13 of the 17 sectors, led by food, drink and tobacco, and chemicals. Export orders also improved to I was amazed, a 22-year high. Output growth eased to the levels seen at the start of the year on the back of slowdowns in the chemicals and mechanical engineering sectors, but remained robust historically. Firms expect a firm rise in production over the coming quarter. Now, of course, part of it is to do with the fact that the pound has gone down for years, decades. We get that. But it's still fascinating. We're doing more business globally. That is amazing and fantastic. The only caveat to that, I have to say to you, is that manufacturing accounts for merely 16 or 17% of the UK economy. So, don't get your hopes up, but clearly, according to the CBI, manufacturers broad-based, are doing very well. Well, hopefully it's real, and hopefully it will feed through to the wider economy. Great news. According to the Council for Mortgage Lenders, buy-to-let UK property sales have fallen by nearly a half over the last year. Get in there! Buy-to-let home buying activity was, quote, nearly half of what it was a year ago, quote, and had averaged around 6,000 purchases a month over the last 12 months, said the CML, which represents banks and building societies, mortgage lending, of course. The number of landlord purchases involving a mortgage was 5,300 in April this year, compared to over 10,000 in February 16 and nearly 12,000 in July of 2015. Some landlords, I'll bet bloomin' all of them, have claimed that major tax changes being phased in gradually between April 17 and April 20 meant letting was no longer made financial sense, and some, where is my tiny violin, would end up making a net loss. Do you remember Dastardly and Muttley? I've got Muttley's laugh in my mind right now. At the moment, landlords conduct mortgage interest and other finance-related costs from their rental income before calculating their tax liability. But this interest relief is being slashed from 100% of mortgage interest and finance-related costs to, by 2020, 0%. So this is the point, listener. Until April of this year, all the interest that they were paying on their mortgages, you could charge it as an expense, a business expense, against rental income. By 2020, you simply will not be able to do that. Thus, it becomes, in effect, unprofitable. And, in the future, the only profit they'll make is that there's a capital gain, give or take. Well, I believe that unicorns will come before that happens. Let's move on to markets. And there's a lot to talk about. I'm showing you a chart, a really great chart of the US dollar. And let me remind you why the US dollar is so important in investing, long-term investing. Because when the dollar is rising, commodities will generally fall. Listen, you're a cattle farmer making beef for McDonald's in America, and you're a cattle farmer in Brazil. If the dollar rises and you are selling in dollars, because everything pretty well is traded in US dollars around the world, then you are prepared to accept fewer dollars for your beef, because in relation to your own currency, the real, you'll still be making as much money as you were previously. So when the dollar goes up, beef, oil, gold, wheat, you name it, generally go down in price, generally speaking. When the dollar goes down, commodities go up in price. And I've been saying for months that the dollar is in a downtrend, so this is good for commodities. And there is the chart since, in fact, just about the 1st of January, The dollar index, which is the dollar against a basket of currencies, has been trending down until from about 104 on the index to about 96 on the index. Now, preciousmetalsforecast.com suggests to us that the dollar is likely to go back up to 99 pretty easily and maybe up to 100, 101. And this is what I've been saying for several weeks. I told you time and time again that the dollar was in a downtrend. And by the way, this was when everyone was saying the dollar was still in an uptrend. As you can see, it had been since the summer of last year. Well, I've also been saying the last several weeks that the dollar is going to go back up again, whilst, of course, everyone was saying the dollar was falling. It's funny how that happens. And this is why I turned short-term pretty bearish, pretty very bearish on gold. And what's been happening to gold? Well, gold was going up 1200, 1250, 1275, 1280, 1290, 1295. And when it was in the 1280s, 1290, I was saying, I don't like what I'm seeing here. I don't think that gold's going to break above 1300 here. I think it's going to correct again. And indeed, it had fallen materially from the end of February, and then it was rising again. Everyone was getting excited. I was too, but then I saw things happening. And sure enough, I said last week, we're down at the 1240s. This is probably where there's going to be a bounce. We had a $15 bounce, the early 1260s. And I said on Twitter, I'd need to see 1265 taken out and held before I could say 1245 was like the low. And indeed, I didn't like the 1245. I thought it was more likely, and I've said it repeatedly on Twitter, 1200 plus or minus $30. And this dollar chart here, it gives very strong credence to that. The dollar has hardly picked up yet, and yet gold has fallen from just under 1300 to the low 1240s. It seems to me the gold and silver miners are in a very short term but somewhat sharp downtrend. Don't be a hero here. It looks to me as if they're going to continue to fall. Oil has been down into the low 40s. It was up at the low 50s. It went down $10. It seems likely it's going back up to the high 40s now. So you'll see in a week or so, you'll see it starting to rise again at the pumps. And indeed, I don't know if going up to the high 40s, it's immediately going to go into the 50s. But I can tell you what I'm seeing now is that oil has probably bottomed in the low 40s. We might have a revisit there. We might even revisit 38 or 39. But I'm telling you, what I'm looking at very, very seriously and with high confidence is oil in the 60s this year. As I say, we could yet see a fall in oil, but I'm looking at oil in the 60s. You're looking at 130, 140 at the pumps again. I'm afraid, listener, that's in pounds, £1.30, £1.40, going back to the all-time highs. Looking at bigger picture and longer terms for markets. Now look at shares. There's an excellent chart of the last, 25 years of, in yellow, you've got emerging markets relative to the S&P 500, and emerging markets are at all-time lows against the S&P 500, the US daddy stock market. The more olivey colour is the global index of developed market indices except the US. So developed markets ex-US relative to the S&P 500. And it's also at all-time lows. Now, there's a very simple adage in long-term investing. And whether or not it was first uttered, but it seems to me it probably was, by Baron Rothschild in the mid-19th century, buy when there's blood on the streets. And some of the finest investors in history in the 20th century have said something similar. Buffett has said something similar. Templeton, Sir John Templeton, has said something similar. And idiots like me also say something similar. Buy low, sell high. And you've got very clear evidence there that if you're going to be in the stock market, you can be in developed shares, you can be in emerging markets, but massively reduce your weighting to US shares. Go and speak to your financial advisors, your wealth advisors, your stockbrokers. Ask them, why are you still heavily in the S&P 500? Their answer will be, well, you know, we've got to allocate according to global allocations. And the US is some 50-55% of all global markets. The US alone is 50 or 55% by value. Fine, underweight it. If half of your shares is in the US, reduce it to a quarter or a fifth and increase the other developed markets and or emerging markets, because as I've tweeted, over the next 10 years it seems likely to me that frontier markets, which are like Middle East, African countries, some Southeast Asian countries, some South American countries, frontier markets will perform better than emerging markets, and emerging markets will perform better than developed ex-US. And the US, which has done so fantastically well for years, indeed decades, will be the worst performer. Doesn't mean that it will fall, although that may happen as well. In fact, I think it probably will. But it will, I'd say it'll do worse than the others, because there's always a reversion. And it seems to me that that reversion is happening. You may not see it over the next month, over the next year, but over the next 10 years, I believe you'll see it in spades. And there's a nice looking much closer chart at emerging markets over the last roughly 13 years. It shows emerging markets versus the S&P 500. And if that index takes out the almost horizontal red line, then what you're looking at is a double bottom, major double bottom, and emerging markets are going to rise for years against the S&P 500. Moving on to another market that I've talked of in the past, uranium. Take a sip of water. Fascinating statistics in uranium. The Uranium Exchange Traded Fund, the URA, collapsed 60% in 2011 alone. No doubt, it was overpriced when the tragedy of Fukushima happened, and there was massive selling. It was overpriced. It had been overbought too much. People had been manic about it. So it crashed 60%. That was in 2011. In 2012, it went down a further 19% from where it ended 2011. In the calendar year 2013, it went down 22%. In 2014, it went down 23%. In 2015, it crashed again, 37%. Do you think by the end of 2015, of 6 massive negative years, it might have been cheap? Well, in 2016, it fell a massive, walloping, huge 1%. And so far this year, it's fallen another whopping 4%. Listener, it's flat for a year and a half. When a market does that, and I've shown you a couple of charts there, you just know that the selling has stopped. Buy uranium miners, folks. Lock it away. Now, for the next year or two or longer, this very much goes in line with what I was saying about oil. And I'm also bullish about gas as well, natural gas, as many of you know. When a sector of the stock market grows so much as a percentage of the overall index, it's because that sector has been bought and bought and bought and bought. And, you know, that's no bad thing. If you'd been in that sector, if you'd been in IT, for example, or in healthcare, so on, you'd have done fantastically well, and so on. If you'd been in energy, oil and gas company shares, you'd have done really, really badly. And the S&P energy sector is at the lowest percentage of the weight of the S&P that it's been since 2004. We're talking about oil and gas companies. And by the way, over the next 4 or 5 years, from 04 to 08, oil and gas shares quadrupled. We now have the lowest weighting of the S&P in energy. And that will be the same for the FTSE and EU stocks as well. Buy some energy stocks. If you have to be in the stock market, be in energy. Shell, BP, Exxon, and lots of other companies. But you know these company names. And it doesn't mean that they've done particularly badly. It's just that other sectors have done so fantastically well. There's no blood on the streets, but I'm telling you, the ones that have done fantastically well, how long do you think that's going to continue? Think big picture, think contrarian, think what's relatively cheap. And at nearly 49 minutes, I'm coming to the quotes of the week. And it's particularly depressing that Theresa May and Emmanuel Macron, and no doubt the other global so-called blooming leaders, they have been waiting and waiting for years, just building up positions to make the internet into the worst Big Brother device you can imagine. Theresa May said, Islamophobia is extremism. Finsbury Park will be used to silence us all. I tweeted that this is what May has been looking for. The internet is going to become unfree. Hashtag 1984. How appropriate that today would have been the birthday of George Orwell. And I quote the great, the giant George Orwell, and I leave you with this thought. Before I do, I want to say thank you so much for listening to the show. I get a great deal out of it by being able to express myself the way I want to, tell people what I'm thinking, what I'm seeing, and maybe précis, shorten the list of what's going on out there so that you get a simplified version, a shortened version, should I say. Nothing of it is simple. A shortened list of what's going on, both in economics and markets and politics. And if this resonates with you, then please follow me on Twitter. I don't understand why I have hundreds and hundreds of listeners to the show, but only a couple hundred followers on Twitter at Booms Busts Show. The more people who follow the Booms Busts Show account, the more people have a chance to retweet things that I'm retweeting. It's not about retweeting what I'm saying, things that I'm retweeting to your followers, and then they get to read what you are getting to read. And if you want to correspond with me, I'd love to hear from you. My email address for the show is jd@theboomsandbustsshow.com. jd@theboomsandbustsshow.com. I've enjoyed this week tremendously. I remind you, this is a weekly podcast. I'll be here every week telling you how it is. Today, I should have said it right at the top of the show. Today is Monday, the 26th of June. Although I did say it was last week we had the anniversary of Brexit. So 6 1/2. I leave you with George Orwell. In a time of deceit, telling the truth is a revolutionary act.